hard to look much beyond the reimposing of sanctions on Iran by the United States, or the other way you look at that is the United States abandoning the Iran nuclear agreement. The consequence of that have been baked in the oil price for, I would say, a few weeks, if not months now, as we've seen the oil price climb above 70 and now heading firmly towards $80 a barrel. Not so much because of the geopolitical crisis that this triggers, but ultimately because of the squeeze it puts on supply and demand at a pretty critical time of the year. We're talking about, if we look at what happened the last time Iran was under these types of sanctions, their oil exports collapsed by about 50%. So they went from around 2.5 million barrels a day to about 1 million barrels a day. So you're talking about a loss of about 1 million, 1.5 million barrels a day of oil. That's equivalent to the total OPEC, non-OPEC supply cut. So from a squeeze on supply, it's going to have a very big impact over not so much the immediate weeks, but certainly in the months to come. And one would say, unless there's a new supply that comes from elsewhere, we could see prices not only getting to 80, but way above that. So I would expect the OPEC producers, who now have a much more complicated decision to make when they meet in June in Vienna, about whether they should abandon or end their own supply cut agreement, because if they continue with their supply cuts of 1.8 million barrels a day and you take another 1.5 million off of Iran, you're up at 3 million barrels a day off of the international markets at a time when supply and demand are pretty much in balance. So that could be a big spike to the oil price, and that for OPEC is actually not a very healthy thing, because it essentially kills demand at a time after some years of painstaking work to create a more healthy, normal, fundamentally driven oil market. If you now have demand erosion due to big spike in oil price, that's a problem nobody wants. Even though in the short term you might like the extra few dollars in your pocket, over the mid to long term it does a lot of damage to demand, which of course for oil producers and sellers is not a good thing. So perhaps that's a lot of things to think about over the week, but once you push one domino over, i.e. US Trump withdrawing from the Iran nuclear agreement, there's a lot of dominoes that fall after that, and you've got to look at each one and what its implications are. For the short term, it's higher oil prices and possibly higher oil prices.